So Wendy.
All right, guys, welcome to the pre-market analysis of up to the public every single Wednesday. Thanks for joining us this morning. I'll give you guys a little bit of a breakdown of what's going to happen once I do finish up here. So this is Spartan speaking, by the way. I'm going to go ahead and pass it over to Beth. Beth's going to come on. She's going to go through the macro environment, any news events that are happening over the course of this, or that happened over the course of this evening, as well as what happened over the course of this morning as well. That makes sense to be looking at, that we should be aware of, going through the bigger picture items, ETFs, commodities, et cetera, et cetera. Once that's done, I'm going to come on. We're going to be going through the individual names that we're looking at from a bigger picture perspective. We'll look through the SPY, the FANG, the Qs, the VIX, the IWM. Names are gapping up, gapping down. We'll talk about the news associated with those gap up, gap down. So we'll also go through the technicals on those charts. After that's done, South Beach will come on, go through the macro environment, any analyst calls he's looking at for today, as well as bigger picture items as well. Then we'll do a quick little recap before the open. So without further ado, I'm going to go ahead and pass it back over to Beth, guys, and I will talk to you shortly. Beth, if you're ready, it's all yours.
I am indeed, sir. Good morning, good afternoon, good evening, friends, and welcome to those of you who are joining us with our live YouTube stream. I'm waiting for spot. There we go. Okay. We do the only thing that could and will move the market more than likely is the FOMC minutes. And the reason why I say that is because the market's a thin holiday, right? So it could, if there's any surprises, it could be a little bit in now. We do have the mortgage-backed rate came in, still going down, which is positive. Waiting on some building permits here. Let's see if we get them. There was a UPI crude draw, right? They're expecting a monster draw, FYI, in natty gas. So be aware of that. That doesn't come out to 10:30. Okay. So we'll see how that plays out in a minute. Other than that, let's see. Thank God. I think we're done with Fed heads talking. Please and thank you. Yes. Okay. Finally, quiet day. Out of Australia, global manufacturing were a little bit softer. PMI flash, a little bit softer, and their global composite PMI a little bit softer. And money supply, you can see here, came up. Look, we've got two opposing forces working right now. We've got treasury, we've got a huge, globally, a huge balance sheet from quantitative easing, but I would argue also from 2008 financial crisis. You don't build this stuff up unless you've really been working hard at it, right? And then we have, on the other side, liquidity issues that can potentially grind things to a halt. So then that begs the question, will these central banks be forced to do quantitative easing as a result of that? And look, to me, my narrative on the Fed, they've been a complete, they literally are incompetent, okay, with what they're doing. The quantitative ease way too long. That created this balance sheet fandango. And then now basically they're more than likely going to quantitative tighten way too long. That's just the nature of the beast. Out of Germany, we've got here a little bit better, a little bit as expected. This is flash, and the same thing with composite PMI. 46.4, a little better, a little better, a little better, a little better. Okay, we did have an ECB head talking, Fernandez Moro. Out of UK, better than expected, better than expected, better than expected. Okay, and then we had a bond auction, and you can see the rates were higher than expected. And here's a gilt auction, they were higher than expected. It's just, this is the stickiness. I think a lot of people don't understand when a commodity super cycle exists, the stickiness from, it's like whack-a-mole in terms of the different commodities going up a lot. So we'll see how that plays out. We do have durable goods. We'll see how that comes out. jobless claims, yada, 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 and we have defense, ex-defense durable goods. So a lot coming out at 8:30. Then we have the 9:45, the PMI numbers, right? And new home sales, October. And some sort of it, this is actually important because a lot of people hang their head on this number in terms of where we are, in terms of the consumer. It's been not very pretty, as I like to say. Okay, and then as mentioned, 10:30, you got these EIA crude numbers, yeah. And then basically 11:30, lots of auctions. Don't forget, market is going to be very, very thin in this afternoon into those FOMC minutes. Okay, you have to be aware of that. Okay, it's at 2:00. Bank of England pill is also speaking. The market's closed tomorrow and the market's only open a half day. There will be very little people in on Friday. Very little people. We had John Deere, right? See that? They did actually do better than expected, right? So that's kind of cool to see. We haven't seen that, but KC Kingslaw lowered their guidance as well. Not a lot to hang your head on right now. Yield curve steepening, best indicator recession has begun. We know this, no doubt, but what we forget to look at, and I continue to reiterate, most people look here, going back to this 1988, because most of the charting services only have here. Guess what? We have, and I show you, going all the back to 1900, okay? You have this, and I think, look, I think we're going down here, to be honest with you, the inversion, FYI. And then you have, in terms of the depression, similar to, but in terms of one of the yield curve spreads, inversion, Volcker was the top dog in terms of getting it really down hard. Okay. And when he really aggressively tightened, that's when it started coming. Okay. All right. We understand this conundrum, but I'm gonna throw a little bit of water on this, and that the reason why is we would have to really see unemployment go up a lot. Now, former recessions, okay, like here, whatever, former recessions, normally unemployment was like 7-8%. Okay, I don't know if we are able to get there just because of the new paradigm we live in with this market. So, but that's kind of cool, right? The terminal rate you can see right there. Okay, what do we got here? Glencore PLC versus inflation. This is actually pretty fascinating. And the reason why I say this is the reality is I think that we're going to see more and more trying to get things out of the China conundrum. I think we're going to see more and more countries, cobble together their own, and they're going to be using certain individual companies to do that for them. Okay, so here are the futures, right? Okay, this is the fertilizer. Okay, this is natty gas, and this is potash. And I think this is why you're starting to see some of these fertilizer names starting to go up. Okay, and shout out to South Beach on Mosaic. That's the one I chose as well. It is best to breed, so you might as well just think about it that way. And here you have natty gas futures. So obviously they're way higher today, right? Oil trade is screaming higher right now. For my students, I got them in at 34.75. This is going to be up 100% real fast. And I have a little bit of a spread, but by the nature of this, with the KOLD, it's 2-to-1, is it, or 2.5 to 1? So as it goes higher, it's 2.5 to 1 now. Okay, just be a function of the way in which the boil is rallying. Units, baby, being a near ghost town. Now, I don't know if you saw this, but there was a print that in the Apple manufacturing facility in China, they have been cloistered for weeks now. They're actually fighting back and starting to riot against the police. Just saying. Okay. Near ghost town as COVID cases hit fresh. Well, I mean, I don't know what to tell you. Okay. What do we got? Bank of England projects more than 30 billion pounds of annual quantitative easing losses for 2023 and 2024. The Treasury is now bailing out the central bank. Treasury is being, I mean, this is present and future for quite some time. And this is what happens, right? When you quantitative ease too much. Bank of England is the only one admitting it, right? So just saying. Okay, let's see what our friend here. I love this guy with his charts. Let's see what we got going on here. This is the a letter of apology. They still can't find the money. You're talking a lot of money. All right, China signaling reserve requirement ratio cuts. That's why the Chinese names are going higher. Right? We'll see. Some of them are popping. I don't know if it's sustainable though, but they got a problem there, and that obviously is not good for a lot of things. All right, on the commodity side, 7%. This natty gas is just. I'm downright giddy on this one. This is right kind of big. Okay. What else have we got going on here? LEI contracting and ISM moderating fast. Richmond Fed may, no, I'll be honest with you, I don't care about the Richmond Fed. It's the Dallas Fed, it's the Dallas Fed, it's the Dallas Fed. Okay, it's the San Fran Fed, it's the Atlanta Fed. Those are the ones of the real marketing, if you know, in terms of manufacturing now. Short interest for typical stock remains extremely low. Just thinking about this. Say, what? You wouldn't have thought that now, friends, would you have? Okay, global container rates, we've talked about this before. I was actually pretty fortunate. I grabbed some tanker rates, tanker stuff really longer dated, and it's up really nicely for me. There's another problem here, and I kind of discussed it yesterday. In Europe, they don't have the tankers. They don't. So that's another supply chain disruption, right? Here's a manufacturing, right? Ugly. Apple and cap as a percentage of GDP of S&P 500 index. Microsoft cap. This has got to change. I'm just saying, the S&P has to come forward and basically readjust, rejiggle their allotments, the percentages. It's just not, you can't continue with this. You just can't continue with this. It doesn't make any sense to me, to be honest with you. All right. What do we got? FTX says substantial amount of crypto assets stolen or missing. I guess who did that? Crypto platform's bankruptcy lawyer says it was run as a personal fiefdom. Yeah. Let's see if they get, let's see what happens. If there's an extradition, that's the key right there. The guy should go to jail forever. Alice agreed in Russian oil. This is a joke. I mean, so basically, who's going to subsidize this? Who's subsidizing this? HP, okay, plans layoffs with PC demand slump stretching into next year. Dell warns of worsening declines. We'll see. Okay, so here's the real dirty laundry, right? The reason why it was so they had such a contentious is because Iger kept, putting his face in there and basically telling him what to do. So, and he was offended by that. Confronting Iran process regime uses brute force, but secretly appeals to moderates. You got problems, and congratulations. We as a globe, we have to, especially when there's oppression, there's a moral and ethical thing that we have to do. And I just mad respect for these women. That's all I have to say. All right, what do we got? Walmart shooting what? I can't. All right. Ethics watchdog group seeks probes into oversight of official stock trading conflicts. Yeah, we talked about this yesterday. Facebook's most popular posts were trash. Here's how it cleaned it up. So they're now saying that out of the 20 top posts, only one of them qualified as engagement bait. So they did do their job with that. Look, if you're going to talk about fake news, okay, it really should be fake news, okay? And believe it or not, sometimes things are black and white in the world. The problem is nobody really, this is why I don't like social media. I mean, I can't. Laser, congrats. I think most of the room is in this trade. And this was a function of the chatter. This was months ago. This was in August. The chatter about this, now it's official that they are looking for a buyer. And it just so happens that we got another nice little pop on Manu. So calls, equity, everything's doing well in that regard. I had to show you this. For the bakers out there. I had to. You know, I used a lot of butter and it's like, what the hell? Anyways, what do we got? Must Twitter takeover triggers poison clash? No, duh. Okay, I balloon. We know Russia strikes maternity. What? What? Tesla gains with South Korea Cybertruck development pushing aside Twitter distraction. Yeah, I got it upgrade too. We'll talk about that case. Says Bitcoin will hit 1 million. Honey, Whoopi, let's see if we can get above 10,000, 20,000, okay? Let's say 25,000, okay? Let's take it one step at a time, okay? All right, here's another one, you know the drill, here we go again, yada, yada, Microsoft. Look, this is the time of year, and my students know this, and people know this. This is when I do my due diligence. Okay, I'm starting to look at seasonality again, right? And we'll see what happens. I have ideas, and we'll put them to fruition. 7 stocks that have lots of cash and tons of risk. So this is the problem here. You can't just indiscriminately, even if they have a lot of cash on hand, okay, you have to still look at your action plan as to why you would invest in something. Okay, so what does that look like? And you know this, we talk about this all the time. We're talking about management, right? So Generac, I told you my average is now 103.26 on it. Okay, and it's forming a bottom. I'm going to add, okay, I have a 1% position. I'm going to add if it can reclaim 127.50. Okay, so that's how I look at it right now. I bought Zoom off of the technicals. Why? Well, because it has a triple bottom on it on the weekly. That's why. So you have to look at technicals. You have to look at macro. You have to look at a lot of things. You just can't look in a Barron's article and say, I'm in. You have to do your own research. And this is the problem. Now, don't take this personally. Most not in this room, most traders are lazy. And they don't want to do their homework, whether it's technicals, spending the hours and hours necessary, whether it's learning a craft in terms of what you do well, okay? They want to be fed ideas. Now, granted, we have the best technician, I think, by far, one of the top 5 globally, I think. I think it's pretty safe to say, okay? This is a day trading room, right? Those are totally different sort of scenarios. I'm talking in terms of bigger picture type stuff because that's what I do. Okay, teaching you how you can be successful trading commodities. All right, not intraday, not daily, but looking at a weekly, monthly. You have to have patience. Same thing with these other setups too. It based on what your action plan is. Okay, use this time when the market is thin to do your homework, do your research, educate yourself, please. All right, that's my sales pitch. Okay, paying it forward, 75%. Yeah, let's see if it's still 75%. Yeah, okay. All right, what do we got? So look at this. Look at this. Look at this. At 3:57 yesterday, someone came in and bought $1.9 million. This, my friends, is illegal. I can tell you right now, someone knew about it. Who knew? Well, you do the math. Okay, this doesn't happen unless someone's been told. And you know what? I should have followed it. I could have, but I didn't. I said, what the hell? Anyways, just saying, right? Here's Best Buy, Burlington, Home Depot, Nordstrom, all getting 5s. Being hot, my friends. Right, see what happens there. Let's take a look at analyst stock ratings. Okay, so ZBH, there's been interesting stuff going on ZBH. Anyways, this Larry Beagleson, 71% stud, Wells Fargo, 7.5%. So this MGNX, this is Chaltsu, 8%. Okay, this is why you look at the success rate. If you're only successful 8% of the time, this is where I'm absolutely possibly gobsmacked is why would you follow this person? This valet. And the market does. Deutsche Bank, Liam, oh, Deutsche Bank, 17% success rate. Seriously. I'm serious about this stuff. Medtronics got a downgrade at Citi. Joanne, a studette. The price is higher. Crazy. You know what the people are only going to say? Oh, downgrade from Citi. Victory Capital downgrade, 80% studs meet from Piper Sandler, 8% decline. The vast majority, because so many things are sold off so hard, they're basically higher. Is that not incredible? I just find that just crazy. Yes. I love whatever you do. So much fun. Okay, so we have a couple potential studs. I made 69%. He's on the cusp. This is interesting, this carbon streaming, OFSTF, because it's 139%. That kind of always gets my attention. And it's a 69% stud. Okay, so that also gets my attention on initiation. Okay, so just saying. So see what happens there in the CNTG. I have to do a little homework on this also. You know, when you get these monster size, you have to do a little bit of research before you do anything. Let's see insider buying. What do we got? It should be pretty light right now. All right, so we have Carvana yesterday. Lion, CLMT, okay, and BXSL insider yesterday. You can see here all of these, right? See any millions? No millions. Okay. Insider sales. This is the only one TTEK was tied to options. Okay. So obviously you see that's green. You can't use that as anything, right? And then you see team selling. Okay. And here's a director, King, Ping. And then you have here NVT Navitas, sorry. Okay, so we still see UN stuff going through, right? You're going to see, tax harvesting. You're going to see certain higher PE names, who's been naughty, who's been nice. We'll see how that plays out. Okay, and we'll just have to sit back on our hands. All right, so what happened? This is year to date. Okay, so. All right, so oil and gas is 60, come on, seriously. Solar, right? Anyways. Worst is REIT equity, 79%. There's going to be a bounce there. Real estate, we know, it's coming, okay? I showed you this yesterday, this free scanner. I still, and Jonathan asked me, I still, my Season X is my go-to, okay? Because I can manipulate it. There are sales on this stuff on Season X for those of you who are looking to enter it, okay? Everything is on sale right now. I encourage you to spend a little bit of money, maybe just on one thing that you can afford, okay? to broaden, right, your horizons in terms of your toolbox. I've got dozens of things in my toolbox that I subscribe to. Some of it is for this room, but a lot of it is just so for me to get some ideas and stuff. All right, what do we got? Stock market loves moderate CPI inflation. Anything above 4 is bad. Anything less than 3, -3 is bad. And this is the porridge one, less than 4, greater than -3. Okay, to get it to the right scale. Okay. If you are only in the Dow during this sweet spot, this is your return. This is the growth of $1. And this goes back to 1914. Saying, right? And this is non-moderate inflation. Look at the growth. Nothing. Growth in only during periods of non-moderate inflation. Okay. So, would you rather do this? Okay. Or would you rather do this, or would you rather do that? I mean, these are important stuff. All right, now let's take a look at PPI. This tells you the crux of what the problem is right now. Less than 9%, okay, and greater than mine is good. Look at where we are right now, coming back down in here. This is a positive for the market. What does the Dow do only when, okay, look at here, right? This was like 825. Look at this. Seriously, look at this. Okay, so for now, PPI, you can see, is a stronger indicator for us than CPI. And here you can see what happens here, shit show, right? This is PPI. So the most important, this is telling us to the market, is PPI. Cost of goods and services, what it costs for manufacturing, bottom line, business, corporations, okay? And that's what we're all about. I guess the administration's going over after non-banks for tougher oversight. Well, it's about time. All right, real estate, okay, as an inflation indicator. Okay, real interest rates, you can see right there. Growth of $1 in real interest rates. Okay, so I'm sorry, that's real interest rates when it's greater than -6. Okay, so you can see here, well, -5, right? Right, when it's less than -6. Okay, this just pictorially shows you how important rates are, as well as PPI is, to the market as a whole in terms of making money. It's that simple. All right, the heat map is a little extended. Yay, we love it. Whatever. You can see here 1050, you would expect this in a bear market. It's all about the 200. Obviously, energy has been strong for quite some time. Consumer staples as well. You know, that was one of my top themes for this year, as well as XLV. Those are my 2 top themes, and oil, for those of you who are keeping score. Okay, so I don't know. I think next year I'm just putting my thoughts together. But in my head, okay, I see overseas probably one of the top holdings you want to have. Okay, the initial jobless claims are coming out. 1.55 million, forecast 1.52. Okay, all right, so it's going up. Durable goods 1%, forecast was 0.4%. Okay, there you go. Bonds sold off a little bit on that. Let's see what goes on with that. Okay. I'm going to shut this down because I am not going to be in tomorrow. Right. Once again, I encourage you, longer term trends. This is a very inexpensive service. Okay. This gives you the statistical data. Okay. That goes all the way back in time. Now, if you look at the 1800s, late 1800s and 1900s, right? Okay. Look at where we were. So this is why I want to show you this. We have further to go. Okay, even with you look at the 70s, we have farther to go. Okay, so this is the 10-1. This is the 10-2. Okay, And the reason being is this, you know, 2-year didn't exist. Right? Before that. Okay. This gives you the pictorial statement that yes, we can go lower in terms of this inversion. And the market's not expecting that. Okay. We'll see how it plays out. This is clearly a function of the competency of the Fed. All right, what do we got here? This is, I wanted to look at this, right? This is in terms of West Texas, right? So you saw some profit taking on managed money, but they're still loaded up full bore on it. Other reportables and Uzies and Measies. Okay. So now this is actually pretty interesting. So from the production side, producers, they're 50-50 in terms of the hedging. So what's important in terms of these refiners, right? Hedging. Any commodity business is all about hedging. Normally, like for agriculture, normally you start to hedge for the following crop. You start to hedge normally in late summer into early fall. That's when you would do that, and you go 1 year out. And part of the problem with a lot of these companies is you always want to see who's got the most hedging on in terms of oil, natural gas. It doesn't matter. Okay, if they're hedged, if the commodity goes up, they cannot, okay, profit from it. And that's why some of these companies had to wait for their hedges to come off for them to start showing some nice profits. And there are those who are very minimally hedged, and we've talked about this months and months ago. And there are those who are very hedged. Certain businesses always, certain companies always hedge aggressively. Others do not. Okay, and their balance sheet got the reward for that. All right, so this is natty. I wanted to show you this is natty gas. Okay, so this is really interesting. So what I wanted to show you, all right, so this is the COT. So the COT goes from Tuesday to Tuesday. And it kind of tells you, and the reason why it's important, because they use futures on the commodity side, manufacturers for hedging and stuff. Okay, all right. So this is what's fascinating right now. Okay, this is where we are in terms of natty gas. So you can see right here, they were aggressively short. Okay, and this is the percentage of open interest held by the 4 largest traders. They were aggressively short, okay? We probably will be getting down to here now, okay?
All right, Beth, ready to pop on whatever here. Alrighty, guys, thanks. Thank you, Beth. Morning, what's going on, everybody? Let me just pop up the screen share here. And we'll get right into it. So, there we go. Just gotta log into one of my platforms here. Kind of just crashed, so I'm just going to reload it right when I brought it back up. Of course, just give me 1 sec here, guys. Is 6. There we go. Alrighty. So if you guys are new to chat and have already done so, make sure to click on the Discord link that's emailed to you. You're going to pop in a chat. It's going to look something a little bit like this. First area to go to when you guys do pop in is this new to chat information section. Scroll to the top of that. Give it a read from top to bottom. Most important thing, disclaimer section, risk reward section, read those 2 things. Risk reward, guys, if you guys don't know what it is, you don't know how it works. I do have everything here to explain how it works, break it down. You'd also get the tools associated with applying it real time. So there's a video right here explaining how risk reward works, made by yours truly. You got risk reward profiles on top, which you can use to match your account size as well as your risk reward threshold. Then you got that risk reward calculator right below that, which you can use in conjunction with these profiles to calculate risk reward on the go instantly while you're trading. Continue to scroll down. We have the summary of how the chat works, breaks down these channels work on the left-hand side, so you can probably navigate the chat throughout the day. How to read alerts from an options tracking perspective below this, pretty straightforward. Below that, the options rules that we use Monday to Thursday, the SPX rules that we use every single day. Definitely makes sense to get well acquainted with those. If you're following those ideas, any with the small account less than 10K. So here's some rules, discipline, etc., to break down how to have a better chance of growing those smaller accounts in our opinion. How to pick trades from an options directory perspective below that, and then lastly, high conviction small account trades. All right, pre-market tickers on watch. What do we got going on today, guys? A couple different things: Tesla, DE, HCA, ADSK, MSTR, and SI. So Tesla gapping up and safe with the market. DE earnings beat EPS and revs, year-over-year growth 37.2%, 2023 guidance positive. HCA gapping up in sympathy with the market. ADSK earnings in line, EPS and revs. Q4 guidance lowered, stocks gapping down. MSTR gapping up in sympathy with the market, and then SI gapping up in sympathy with the market as well. Let's take a look at these names from a technical perspective intraday. So first two we're looking at today, guys, are Tesla and DE. So let's have a gander at that. I'm just going to reshape or resize these two here, guys. One sec. Oh, this might actually be okay. I'll just bring in these two. There we go. Actually, works a little bit better. Okay, so first two we're looking at, guys. Today we got that Tesla, and we got that DE. And DE pretty solid guidance there, which is why you got that nice gap up. All right, so Tesla obviously gapping up as well. I'm pretty impressed with that move. I'm not bad in the pre-market. Oh, there we go. Just get some levels from the last couple of days. We should be good. Okay. Let's take a look at this intraday. It was extended to the downside. It just filled the gap this morning. That 174.73 level is the gap fill on the extension. Pivot will be that 174.83 level to the upside. Levels able to hold. Room towards 180.63. That level breaks. You get room for continuation. 187.22. Unable to hold. We look for a pullback towards 170.87 to 166.35 on the downside. Overall, on this Tesla, going to be leaning bullish neutral as long as it can hold above that pivot today. If it can, we should see continuation higher. It's had really no bounce in it, so I'm thinking we can get a little bit of a bounce in it today, only if that pivot can hold. Plus, downtrend's broken, so that's not bad. Let's take a look at this DE here. So DE gapping up, guys. What do we got? 432. Okay. Beauty. All right, so we got some nice room back towards that recent all-time high range resistance. Pivot to the upside today, 430, 199. That level is able to hold 438.32 to 446.48 will be tested. Unable to hold 427.84 to the 422, sorry, 19 on the downside. Overall on DE going to be leaning bullish, looking for a continuation push to the upside today. So that is DE, that is Tesla. Take a look at HCA and ADSK. It's a little bit of a gap up on that HCA, guys. Not much, but slight gap up. Let's see where we got room to today. I mainly want to bring this up just because I like the daily chart. It's got some nice room. It's breaking up a range to the upside. Healthcare related names have been pretty good to trade lately, so done quite well on them. So let's just pop this up here. Okay. HCA pivot to the upside today is going to be that breakout level 434.37 levels able to hold 437.34 to the 440.67 level on the upside will be tested. Unable to hold 430.79 to the 422. Sorry, I keep saying 4. It's 227.77 on the downside. Going to be leaning bullish on HCA, guys, looking for a continuation push to the upside if that pivot point is able to hold. So that's that HCA. Let's take a look at ADSK here. One at 89.16 a share. Okay. Need to go lower. Get some more support levels then. One 89.50 pivot level is able to hold 194.53 to the 199.19 level. The 199.16 level will be tested. Unable to hold 186.24 to 181.95 on the downside. Overall on ADSK, going to be leaning bullish neutral. Looking for a continuation push to the upside today if that pivot point can hold. So that's ADSK and HCA. Let's take a look at the next two. MSTR and SI. I think I said bearish neutral on ADSK. I hope I did, but yeah, that's where I'm leaning bearish neutral. MSTR 171.50 pivot. Let's see. Need to get these zones. Actually, sorry, that won't be the pivot. It's gonna be the 8 EMA. This thing has some pretty decent room off the lows if we can get going. It's just a matter of getting above some short-term EMA support, and then you start to open up quite a bit. Okay, let's take a look at the signature day here for now. It's actually been consolidating pretty well. $168.75 pivot to the upside today. This level is able to hold. You've got room for continuation into the 173.40 to 178.15. Unable to hold 164.63 to 159.89 will be tested on the downside. Overall on MSTR, going to be leaning bullish, looking for a continuation push higher if that pivot point can hold. Let's take a look at SI here. So SI, another crypto related name, coming off the lows a little bit. We'll see if we can get a sustained bounce. We've been mainly on the short side of these, but they are kind of overdue for a bounce. So we got to keep an eye on Bitcoin, of course. I need to get some more levels on the downside there. That should be good. All right, let me take a look intraday. Yeah, that's fine. Okay, so pivot to the upside today and get some smaller levels here. There we go, and then we get last day's low. 26.27 levels able to hold 27.88. That level breaks. We got room for continuation into the 29.36 level. Unable to hold 24.20 to 23.20 on the downside will be tested. Leaning bullish only if pivot can hold today. So if it can hold, we got room for a sustained bounce. You do have a little bit of a base forming in the short term on the hourly, inverted head and shoulders. Obviously, you can see the downtrend's broken. Now it's just a matter of holding pivot for continuation higher. Otherwise, it's just going to be a bear flag down here. So keep an eye on that. That's MSTR and that is SI. MSTR, SI. Okay. Let's take a look at the SPY and the FANG. I'm going to bring up the daily chart. Now, I was saying, I told you guys at the beginning of the week, I was thinking 402s, and I think we still got room to get there. Probably today, if we can hold up. Now, market's been showing us what? It's been a flag on the daily chart. Still looks good for continuation higher. Holding all EMA support. It's actually trading within this channel. All right. So still got some nice room to push. I'm thinking we get to that range resistance pretty quickly here. So let's draw it out. Pivot to the upside today, 401.53 levels able to hold. We got 405, 25 to be tested. We also want to label this level right there. 402.35, right? You know what? I'm gonna get rid of this level right here because it's not really much at that point. All right. I'm going to use last day's high as the pivot. 406 is going to be the pivot. Level holds 402.34 to 402.50. Sorry, 405.25 will be tested. Unable to hold. Room back towards 397.96. The 394.21 on the downside. Leading bullish neutral, looking for a continuation grind higher today. So we'll see what happens in that regard. So that is the SPY, guys. Let's take a look at Apple. $150.01 pivot level holds, room towards 151.69 to 153.09. Unable to hold 148.44 to 147.16. On the downside will be tested. Overall on Apple, going to be leaning bullish, looking for a continuation push to the upside today. $93.40 pivot to the upside today. Level holds 94.42 to 95.50. Unable to hold, we look for a pullback on Amazon into the 92.30 to 90.61 on the downside. Overall, going to be leaning bullish off the lows today, looking for a little bit more of a bounce. It is slightly extended, and it looks like it wants to reclaim short-term EMA support. It's currently above it, so I think we get a little bit more of a bounce in Amazon. It's been acting like garbage lately, but it's finally looking like it's got a little bit of bullishness to it. So leaning bullish, neutral on that. All right, let's take a look at the Netflix here. Interesting ranges. That wasn't synchronized, was it? Too bad. That's okay. I'll just take a screenshot of it on this. It's a little bit of a downtrend break as well. Pivot is going to be 258.67 level holds. Sorry, 285.67 level holds 290.88 to 299.68 will be tested. Unable to hold 277.60 on the downside. Overall, on Netflix leaning bullish neutral, looking for a continuation push higher. All right, let's take a look at Meta. So still got your little flag on the daily setup here. $109.78 pivot levels able to hold 114.25 to 118.73. Unable to hold, we look for a pullback towards 105.82 to 166 on the downside. Overall on Meta, going to be leaning bullish, looking for a continuation push to the upside today if that pivot point's able to hold. Let's take a look at Google here. Google 97.16 pivot level is able to hold room towards 98.44 to 122. Unable to hold, we look for a pullback towards 95.95 to the 94.37 level on the downside. Overall, I'm going to be leaning bullish neutral, looking for a continuation push to the upside today. Take a look at the VIX Qs and IWM. So VIX guys, 2180 pivot to the downside today. Levels unable to hold. We got room towards 2048. That level is able to hold. We got room for a push back into the. Oops, there we go. Into the 2333. Obviously, you can see the VIX is kind of rolling over here. It does have room to recent range lows. So I'm thinking that we get continued push to the upside on the market. Obviously, it's bull flagging, and the VIX should continue to come in if the market continues to grind higher or stays flat, right? So it's volatility. That's how it works. That's the VIX. Let's take a look at the Qs. One thing we should keep an eye on though, guys, if we get divergences when the market is pushing to the upside, it typically, we do get little pullbacks in the short term. So we haven't seen a divergence yet, but it always should be in the back of your head. Pivot to the upside today on QQQs, 287.35 level was able to hold, 293.61, unable to hold 283.62 to 279.96 on the downside. Any bullish neutral on that? Last but not least, guys, let's take a look at IWM. Oof. $184.37 pivot level holds 187.15. Unable to hold 182.35 on the downside, leaning bullish neutral there. So that's the spot. That's the thing. Those are the individual names that we're looking at today, guys. We're going to go ahead and type up the pre-market action plan. If you guys are on the YouTube stream, just a reminder, we do have our Black Friday deals on now. You can definitely go check them out at the website. But other than that, I'm going to go ahead and pass it over to South Beach, guys, and then I'll type this stuff up. Then we'll come back on and we'll do a quick little recap, as always, before the open. South Beach, if you're ready, she's all yours.
Okay, hey guys. All right, let's see what's going on. All right. So we had that durable goods that affected the market a little bit. Let's see what it did. So the 10-year rallied a whole 0.011, no biggie, right? So 376, but the 2-year rallied a lot more, right? Almost 4. So what's the spread now, boys and girls? 24.79, almost 80. Okay, so this inversion is flirting with amongst the bigger ones we've seen, and the bond market is screaming loud and clear what their view is, right? you know, recession, stagflation, yada, yada, yada. Okay, that's the situation. Let's look overseas. So the bond in the 10-year in London is down to 3.07. So we're going to use like almost like 4% is the high there. So that's a big move down, right? Their economy's in the shit house. Let's call it the way it is. Okay, they have everything going against them. The bond in Bund, I should say, in Germany is 197. Curve is flat like London's. Let's see if there's any inversion in London yet. Yeah, a little bit. There we go. Finally, 314 on the 2-year, 307 on the 10-year. So they have what, 0.07, and we're almost at 80. So pretty big difference, but an inversion nonetheless. Let's see Germany. Yep, they got an inversion there too. Their 2 years at 217, their 10 years at 198. So everybody's kind of looking like this global recession scenario is ruling the roost, so to speak. Okay, bond prices haven't moved much on the long end, the 10-year. In fact, they're basically down over the last few weeks, but the shorter term continues to go up. So ergo, you have the inversion. Okay, so let's look at commodities. What we have there, oil is down. This thing is wrong. They're showing this is wrong, but let's look at my machine here, my JP Morgan machine. It shows down what, 274 on oil, and I think that lends itself to a bunch of stuff, one of which of course is if we go into a recession and growth slows, you use less oil. There you go. Okay, natural gas though bucking the trend here, right, up 60 cents. That's a gigundo move, but you know, they have this huge trading band, right, between like 5.5 and 9, and so they've been, you know, moving around in there for a bit, and we're starting to move up to the higher side of the band. Okay, and that's what's happening with natural gas. Metal wise, gold is down, which of course we're going to see the dollar's probably up, right? Copper staying in a very tight trading range. And most of these agricultural commodities are in either a tight trading range or, you know, breaking lower, like coffee is breaking lower, and I think cotton has gotten smashed. Yes. And, you know, there's a couple of lumber's gotten smashed. So, but the food stuff, you know, like rice is hung in there, wheat is hung in there, corn is hung in there, stuff like that. Okay, tighter trading range in those. Let's see soybeans. Tight trading range. You know, this is actually pretty good that things can stay, you know, kind of in a range. Lets companies prepare and whatnot. Currency wise, the dollar is mixed against North America. It's basically flat against the yen. China up a little bit, 0.03. Euro is practically flat at 103. And the pound is practically flat at 119. Okay, so not a whole lot going on there. Okay, crypto. So we have a little bit of a rally. Okay, Bitcoin's up 1.6%, but if you dropped a pile of crap from the Empire State Building, it would bounce, and that's what I attribute this move to. Nothing's really changing. Coinbase is up 30 cents, $30. It's 2.8%. And Solana's up 86 cents, which is 7%, which is kind of laughable, down to 250. I think this particular crypto is part of SBF's whole charade. It was part of the backbone of that. And I know that because I know guys who are friends with him, and he kept, you know, telling everybody Solana is the greatest thing out. So for whatever that's worth. Let's look at the foreign markets. What do we have? FTSE dead flat, unchanged. The DAX is down 48. So the FTSE was up 20. Now it's flat. DAX is pretty much the same, down 0.3%. And over in Asia, what do we have? China's flat, Hong Kong's up 0.5%, Nikkei's up 0.5%. So that's your backdrop. Okay, banks and Fed. So you get I think we get the Fed minutes today. Anybody know the time of that? It's probably 2:00, right? Like they always are.
Yep, 2:00.
2:00. So we'll see what they have to say. I don't think it's that important, guys, because you can't be looking at the rearview mirror. You got to look ahead and see what's what. So, I mean, maybe things move a little bit, but we'll see. Okay, we'll see what happens. How it pans out. I don't think it's going to be earth-shattering. The only thing is, at 2:00 on Wednesday, there's not many traders around. So if the machines take hold, you never know. So there's no hard and fast rules. When there's no traders and machines are trading, anything's possible. Okay, and I would say there'll be a major lack of traders come 2:00 on a Wednesday before Thanksgiving. All right, so banks. So we have no Fed governor speaking today. Let's all say a hallelujah for that. Okay, that's our Thanksgiving Day present. We don't have to listen to these assholes for a day. Okay, and we don't have to hear them tomorrow either. So thank the Lord. All right, what else do we have? China. Oh boy, these guys are a hot mess, aren't they? Okay, so now COVID's kind of sort of running rampant like it was in April. Tens of thousands of people have it. Kramer claims they reverse engineered the Pfizer vaccine. I don't know how he would know something like that, but he said it like it was kind of like matter of fact. So maybe he's right, maybe he's not. And if he is right, they're still not giving it to their people. I don't, so maybe it's cultural. I just don't understand that culture at all. I don't understand a lot about it because I would say 99% of the decisions they'd make, I would go the opposite way. So who's to say? Anyway, basically they're limiting movement in their two biggest cities. I think they're the two biggest cities, Beijing and Shanghai. Okay, COVID's a hot mess. That's for starters. And we'll move into some other problems they have with the Apple in a moment. Okay, that brings us to Russia, another one of those really admirable countries we love to talk about, right? They're bombing the living piss out of Ukraine. No water, no heat, etc., etc. So since their army couldn't beat them, they're just going to lob missiles at them and try to bring them to their knees by, shutting off all, services. And that's what they've been doing. Okay. And when all this is over and said and done, it's going to cost God knows how much money to rebuild the country. I mean, they've really just destroyed the place. And it's really hard to watch, actually. It's sad. It's hard to watch. And I just hope that he gets what he deserves one day. That being Putin. Okay. Oil market, so not a whole lot going on there that I could see, other than, they're reacting to the economy. There's a bunch of stuff about, price, price limits on Russian oil and all this other bullshit that we've been hearing for months. And I think that's all it is, a bunch of BS. We do have a floor underneath crude getting closer, right? Because the guy from the Biden administration, who was basically his sounding board for energy, said at 70 we would start filling up the petroleum reserves again. So I would think that is a good floor in oil. So we're kind of near the bottom. Crypto, we'll talk about in a minute. The dollar, we discussed. Mr. Market yesterday. So we had that balls ass rally, and it was fun to trade. We also made some money. Stocks really, rose until the end of the day, which is the perfect scenario for trading. And that's what we got. And that was terrific. Semis led the way, right? Material stocks were really strong. Bank stocks were pretty good. Nothing was really bad. So that's what we had. So, and some of these, stocks that have been in the crapper had some good days. like Generac and stuff like that. So that was yesterday. Group rotation today. We'll see. It's hard to tell. With oil down 2, you would think that these stocks will get hit a little further. When oil goes down, generally, guys, it puts more money in the pockets of consumers. So my tendency always when I see down oil is to look at retailers as a buy. So that's one thing. And interest rates staying low will provide a wind to the back of tech, right? Because of their high PEs and the dividend discount model. So I think that's something to think about. I saw this guy from Bitcoin on here a minute ago. I'm not Bitcoin, crypto. What's his name? He runs, not Genesis. I don't know. The guy with the glasses and he always dresses a little weird. And I'm just listening to him talk and I'm saying, what a pile of crap. This centralized, decentralized. I mean, it is just a pile of crap. They are feeding you a bunch of BS, in my opinion. That's just my opinion on this. Say what else we got going on. So this is not a bunch of BS. They had what's his name on from Goldman Sachs, Curry, who's their commodity guy. Novogratz, thanks that. And he is sticking to his guns on this whole super cycle for commodities. And you watch all these guys come out, and this guy, there's a lot of facts behind what he's talking about. Okay, the underinvestment in the commodity sector is just crazy. I mean, whether it be oil or all these metals that we're going to need to get to the EV place that we all want to be. I mean, the green environment that we all want. And he's saying the underinvestment is just, there's no escaping the fact that we are in a super cycle for commodities, and they may ebb and flow in the short term, but he is convinced that, this is here to stay. And I have to say, after listening to him day in and day out, I'm buying in, I have bought in and I am buying into everything he has to say. I mean, the underinvestment is what, it's all about. And when China comes back online, which they will, they're talking second quarter of next year, but who knows? But eventually they will. And you're going to see like these commodities just, in short supply. God knows what prices can do. And he was comparing, when we have these boom busts and what happens to the commodity cycle, like the Nifty 50, he was saying in the 70s, right after that ended, you had a commodity super cycle, and the .com created a commodity super cycle. And he thinks this FANG thing will cause a commodity super cycle. And he says this underinvestment keeps getting worse and we will pay the price. And that's a really good point he makes. And I think he's right. He calls it the revenge of the old economy. And he's been saying it now for what, about a year and a half. And I think he's dead on. Okay. CS, Credit Suisse, fired 1/3 of their investment bankers and 40% of their Chinese research staff. This company is just a pile of crap and has been for a really long time. And they keep restructuring and trying to fix and restructuring and trying to fix. And every time they finish, they hit another pedestrian with their car and the whole thing blows up. It's just a bad company. It will always be a bad company, and it had always been a bad company, and stay the hell out of it. That's my opinion. Sam Bankman-Fried, $51 billion in collateral gone. CME calls him a complete fraud. And the thing that I don't understand the most about this is he's not in jail. I mean, can you imagine? Why? Why is not that guy not in handcuffs in a freaking cell? I mean, I don't get it. And for his own safety, even so, I wouldn't be surprised if someone, cruised into the Bahamas and blew his brains out. I don't understand the whole thing. He needs to be in jail. The whole world's watching, and this guy's prancing around the Bahamas, making, a lot of noise about this, that, and the other thing. He's a criminal. He's a fraudster. He should be in prison. What else do you need to know? Okay. That's it in a nutshell. Man U. So the Glazers are considering selling the company. All I'll say is this, and I said it to you guys yesterday, when you have something for sale, let's use a painting, a Picasso or a Van Gogh, or you name the guy that you like, a Monet. There's not many of them around. And when one comes for sale, all the guys with deep pockets and little you-know-whats come to the table, all right? And you never know what these things are gonna get. You remember what, what's his name? Steve Ballmer paid for the Kings? Was it the Kings? Yeah, no, Clippers, sorry. You know, these things just get bid up really, really, really high because of their scarcity value. And Man U is probably as recognizable in the world as the Yankees are. Okay, and things like this don't come up very often, so they do not trade at fair value. And this will not either. Okay, that's my rub on Man U. Apple, you have rioting at the plants. You know, to get rioting in China, things have to be pretty bad. And supposedly Spartan food, medication is hard to get. They're locked in there, they can't leave. All kinds of things. You know, it's just a mess. And now they're rioting. So at the end of the day, what's going to happen? Apple's going to have a shortage of phones. That's how I think it plays out. Stock is starting to reflect it. But you know what? They'll fix it eventually. Apple is a stud company. And if it goes down, it probably is a good opportunity. I mean, I'm hooked line and sinker into the Apple ecosystem, and I think as most of us are. Okay. Yeah, I would love to buy them, Rob, but I'm more of a Yankee buyer, if you know what I mean. Not big on soccer, but I appreciate watching the World Cup, that's for sure. Goldman is saying that the bond is going to stay at elevated levels through 24. Okay, they think there's a 20% chance of a soft landing. Morgan Stanley is kind of sort of saying the same thing. And that's the story with that. Hewlett is laying off 6,000 people. Bank of America thinks market is going nowhere in 23, basically flat. And PIMCO saying you should buy bonds and avoid stocks for 23. All of which they're kind of all saying kind of sort of the same thing, right? What else? Tesla lost 670 billion in market cap, but we know Amazon is topping that at $1 trillion, so that's that. Jobless claims we saw. Durable good orders causing the futures to come in a little bit. They came in higher than expectations, which would lend you to think that rates stay higher for longer. Okay, we'll see. It's just one number, so I don't think you can run that conclusion, but that's the case. Okay, as far as earnings, we had Deere and Hewlett were pretty decent. Man U, we discussed. Carvana had insider buying. On the short side, we had JWin, who always disappoints, right? They are just the worst of the worst of the worst. And every time we forget 2 weeks later and they bid up the stock. Autodesk missed, good company there. CS we discussed. Guess missed. VMware missed, that's a good company. Goldman downgraded beyond to a sell, target 5, stocks 1272. Combination of shit management and a lot of competition. EVGR is another one that I'm highlighting, downgrade to sell. Bank of America. These utility companies are going to have a really hard time raising rates because the guys who give them the ability to raise want to get reelected. And when money is tight, they're not going to give them the go ahead, even though their material costs are up. So it causes a margin squeeze. So I do not like that group. And this is the name that they're hitting today, EVRG. Teva was downgraded to a sell. There's not much else. I would say that your trading size should be smaller today. I would say that as the day goes on, it will get thinner. And I would say if you make a little money in the morning, go out to lunch, kiss your wife and kids, and have a good day and enjoy tomorrow. My favorite holiday is tomorrow because you get to spend it with your family and friends. And I look forward to it every year, and I wish you all a happy Thanksgiving. And Spartan, it's all yours.
All righty. Thank you, Salt Beach. What is going on, guys? Good morning. And let's kind of just get right back into it. So if you guys are new to the chat, have already done so, make sure to click on the Discord link that's emailed to you. You pop into chat and it's going to look something a little bit like this. First area to go to, guys, when you do come in is the new to chat information section. Scroll to the very, very top there. And at the top of the section, you see a link to the disclaimer as well as this bolded risk reward section. You can give them both, read both, super important. In regards to risk reward, guys, this is the most important thing in trading. So make sure to go through that section first. I got videos explaining how it works. I have risk reward profiles and calculators in there as well, so you can match it to your account size as well as your account, your risk reward threshold, and then you can calculate risk reward on the go very quickly. So continue to scroll down, new chat information section. You have summary of how this chat works, breaks down all the channels work on the left-hand side, so you can probably navigate the chat throughout the day. Below this, the how to read alerts on the options and equity side, basically how to interpret what we're saying. Below that, Spartan options rules that we use Monday to Thursday in regards to controlling risk, scaling in, scaling out, trading different price contracts. SPX rules below that, important to understand what those are. Any of the small account less than 10K, breaking down if you have a smaller account less than 10K, here's some rules, information, discipline you can put in place. You can better manage your account. How to pick trades from an options and equity perspective right there. Then high conviction small account trades posted in the high conviction small account area when it does make sense. All right, pre-market tickers on watch, guys. What do we got going on today? And by the way, I hope you guys made some money on that DBGI yesterday. It's freaking awesome. And those SPX calls when I was away, well, kind of away, just not at the computer, but on my phone. They worked really well nicely. So, but anyways, guys, Tesla, DE, HCA, DSK, MSTR, SI. So pre-market tickers on watch. Tesla gapping up to the market. DE earnings beat EPS and revs. Year growth 37.2%. 2023 guidance in line and positive. HCA gapping up to the market. ADSK earnings in line. EPS revs. Q4 guidance lower gapping down. MSTR and SI gapping up and the market as well. Let's take a look at these names from a technical standpoint intraday. First two we're looking at today, guys. We got that Tesla. We got that DE. We're gonna have to shape these and make these a little bit bigger here, guys. One sec. Oh, whatever, that's fine. Okay. First two, like I said, Tesla and DE. Let's have a look at those. I think I'm just gonna do that. All right, so Tesla, guys, pivot to the upside today. I think Tesla actually looks pretty okay for a bounce, just about the pivot being reclaimed. 174.83 level is able to hold. 180.63 to 187.22 will be tested. Unable to hold, we look for a pullback into the 170.87 to 166.35 on the downside. Overall on Tesla, going to be leaning bullish, neutral, looking for a push higher if that pivot point can hold. So we'll see what happens in that regard. Let's take a look at what you would call it. There we go. Sorry, I'm just going to set something right there. Let's take a look at the next two, which are HCA and DE. 431.99 pivot level holds. 438.32 to 446.48 will be tested. Unable to hold. Look for a pullback towards 427.84 to the 422.19 level on the downside. Overall on DE, going to be leaning bullish, neutral, looking for a continuation push higher if that pivot point is able to hold. So that's Tesla, that's DE. Let's take a look at the next two, guys. We got HCA and ADSK. Oops. HCA, guys, pivot to the upside today is going to be the 234.37 level holds 237.34 to 240.67. Unable to hold 230.79 to 227.77 on the downside will be tested overall on HCA, leaning bullish, neutral, looking for a continuation push higher today. ADSK 189.50 level holds 194.53 to 199.16 will be tested. Unable to hold 186.24 to 181.95 on the downside. Overall on ADSK, leaning bullish, neutral, looking for a continuation push higher if that pivot point can hold today. All right, let's take a look at the next two, guys. Oops, there we go. So next two, we have MSTR and SI. So MSTR, guys, we got the 168.75 level pivot, level holds 173.40 to 178.15. Unable to hold 164.63 to 159.89 on the downside. Overall on MSTR, leaning bullish, looking for a continuation push to the upside today. SI pivot, we got the 26.27 level holds 27.88 to 29.36, unable to hold 24.20 to 23.20 will be tested on the downside. Overall on that side, leaning bullish, neutral. If the pivot can hold, we can look for continuation higher. All right, let's take a look at the SPY and the FANG. Oops, did not mean to enter that there. All right, so what do we got guys going on here? So SPY and the FANG pivot to the upside today. I'm going to type this out as I usually do. Is 406. SPY 406 pivots on the upside today. This level holds room higher into the 402.34 resistance. Breaks. We see the 405.25 tested. Pivot, unable to hold. Room lower into the 397.96 support. Breaks. We see the 394.21 tested. Leaning bullish. Neutral. Leaning bullish neutral on the market. Of course, it does need to hold that level. All right, let's post that there. Just going to post this in the general chat, and then we're good to go. All right, so let's take a look at the rest of the FANG. All right, Apple guys, pivot to the upside today is 150.01. Levels able to hold 151.96 to 153.09 will be tested. Unable to hold 148.44 to 147.16 on the downside will be tested. Overall on Apple, leaning bullish, looking for a continuation push to the upside today if that pivot point is able to hold. So that is Apple. Let's take a look at Amazon. Amazon, nice little curl off the lows back above short-term EMA support. Pivot is going to be 93.40. Levels able to hold 94.42 to 95.50 will be tested. Unable to hold 92.30 to 90.61 on the downside. Leaning bullish neutral there as well. Looking for a continuation push higher if that pivot point can hold. Let's take a look at the next two names. Let me just take a look at that. Screenshot this. There we go. Next two names, we got Netflix. Pivot upside today is going to be, so you get that little flag on the daily, 285.67 pivot level holds 298.8 to 299.68, unable to hold 277.60 on the downside, leaning bullish neutral if pivot can hold there. Meta pivot on the upside today is going to be the 109.78 level holds. You got room towards 114.25 to 118.73, unable to hold 105.82 to 166. Google, leaning bullish on that. Google pivot, so you still got that flag on the daily, just got to reclaim the 50 MA. You got the 97.16 pivot level holds 98.44 to 122. Unable to hold, we look for a pullback towards 95.95. That level breaks. We got room for continuation lower to 94.37 downside. Leaning bullish neutral there. And then last but not least, guys, VIX Qs IWM. Let's take a gander. VIX pivot upside today. 2180 level holds 23.33 to 24.93. Unable to hold 20.48 downside. QQQs. Pivot to the upside today is going to be the 287.35 level holds 293.61, unable to hold 283.62 to 279.66, leaning bullish if pivot can be reclaimed there. IWM last but not least. Pivot to the upside today, 184.37 level holds 187.15, unable to hold 182.35 to 180.50 on the downside, leaning bullish on that. All right, guys, so that's the SPY, that's the FANG. Those are the individual names that we're looking at today. We'll see what happens. I think, market looks pretty good for a continuation higher. Daily still flagging. It's about holding that pivot point up. We got the Fed meeting minutes at 2 o'clock. I think, well, I'm probably, we'll see what happens, guys. We'll see how busy it is. But I'm thinking it's going to be kind of a meh, whatever, kind of whipsaw action, but we're not really going to go anywhere. But yeah, we'll see what happens. Should be interesting. Now, if you guys are watching the YouTube stream, we do this every single Wednesday. Make sure to go to the website. Black Friday deals are on, obviously, for the next couple of days. Enjoy your Thanksgiving, everybody that came